We're here, we're live.
Yeah, we're here. We're live. We're here ready to tell you guys about some crazy stuff. So first off, if you are drowning in student loans, you need to stick around for this market moment. I'm Estrella Gallegos from eXp Realty, and you are listening to Denver's Market Moment podcast, the show that guides you through the crazy world of real estate in the Denver metro area. Today, I have a very, very special guest, longtime friend, business partner, Chad. He's going to talk to you about options when you're dealing with paying off those stupid student loans. They're the worst. Like I don't even have words. It's just gross. But before we get started, Chad, do you want to just tell folks a little bit about you, what you do, why this is so important to you?
Yeah, absolutely. Obviously, thanks for having me. You know, it's fun to share this stuff with people because if you don't have a resource, you just don't know. A lot of people do stuff on their own where they spend more money, or they go down the wrong road, or get taken advantage of. To kind of back up, my story of personal and how it ties to college, I self-funded for 3 months. I just grew up a saver and I didn't have any parental help. So I knew that if I wanted to go, that's kind of the route I needed to go. So I saved my whole life and went. And then I ended up hitting the crossroads of, I run out of money. What do I do? Who do I turn to? And I know they have counselors and stuff, but I already knew that I wasn't getting help from my parents, so I couldn't necessarily go to them. I didn't know if I trusted the school system, so to speak. And it was always just talked about like student loan debt was a scary thing, for a lot of people. And so just that initial fear, of not even going any further got me out of it, quit and join the workforce. And, I've done management, I've done construction, I've done a lot of different things. And now I'm in the financial services world. And, I'm just learning how to be that person. Like I want to be that connector. I want to be that friend, that people can turn to and ask questions, can provide it for them. So I'm very passionate about what I do. I enjoy helping people.
Nice. So that's really interesting because I think that you are one side of the coin and then there's the other side of the coin too, where people get loans and think because that really is their only option to go to college and to build a life that they had always dreamed of, that they thought, college was the path to get there. And, so a lot of people end up with a lot of student loans. And I see this a lot, as a real estate agent, people who want to buy a home and they just don't qualify for the amount they want to, or don't qualify at all because they have student loan debt. And so, Chad was talking a little bit about some of the work that he's been doing to help people with that piece of the pie, to help them get to, that affordability number for buying a house and helping folks just overall to pay down their student loan debt. So Chad, do you want to talk a little bit about what that program is? Like what are some of the benefits, like address any kind of concerns that you've heard about when people are like afraid? Cause you hear about like debt consolidation or all these other, and they're like, what's that going to do to my credit? I want to buy a house.
For sure. So yeah, you've kind of been through the program, so to speak, and we can touch on that later if you feel comfortable.
Yeah.
I've had other people who, exactly fit that world. They're teachers. Teachers are genuinely underpaid. We all know that. Hopefully someday it changes. Right now it is not. So, I'm working with one specifically, and, it all starts with a conversation, right? We have to know someone. I have to know what your pain point or your struggle is. And then I have to see if I can address it personally through my services or through someone that I know. Being that master connector is really what I'm all about.
Mm-hmm.
Student loan debt. It's a very simple process, right? I have a conversation with whoever it is that comes to me saying, hey, can you look at my situation? I recommend no matter what your situation is, you at least explore your options, because then whether you qualify or you don't. Doesn't matter, but having that conversation, because this thing is so kind of intricate and detailed, right? It can be the amount of money. It can be how much you make. It can be your household size, not your dependents, which is different from IRS regulations. circumstances changed. People got laid off during COVID. So
Mm-hmm.
there's so many different dynamics that I think everyone should at least explore it if you have them out. 25,000 is higher is kind of what we at least advocate on the behalf of. If you have less than that, still let's have that conversation. But because that's low, because, a lot of us in this world assume that the Biden thing is already being forgiven. 10,000 for some, 20,000 for others. That's why they kind of don't really focus on those lowers, but we can still have those conversations.
Mm-hmm.
People who have qualified and they're in the nursing world. There are people who have not qualified. So every situation is different, and I don't want to disqualify anyone from reaching out, seeing if they do have help.
Yeah. So let's say I am a person who has $188,000 in student loan debt. And is that like too much for this program or?
No. So it
Okay.
all depends on your salary, right?
Okay.
I have a calculator at my disposal that I use through this company. And if
Uh-huh.
we're just throwing numbers out, hypothetical,
Yeah.
right now we can kind of run through a quick generic overview. So a student loan debt of 188,
Mm-hmm.
maybe your current payment's 500. That's kind of average. It seems to be with people.
Mm-hmm.
If you're a teacher, for example, hopefully you're making 60,000.
Mm-hmm.
Household family size, let's just do, for example, and we'll kind of change some of these as I'm running.
Yeah.
So right now, just from what I see here, it almost cuts it in half. You went from 500 to 285.
Mm-hmm.
And then, so, and that's just the basics, right? I can quickly play with the dependents because if it's a family, you have two siblings, pretty general. It went from 285 to 173.
Nice.
Your income, there's just so many different things. That's why I want everyone to have access and have, an outlet and a resource to see, and we can make any improvement. Because I think every little bit helps, absolutely, regardless of what it is.
So it's reducing my payment in that situation. Does that have hits to my credit score for like lowering the payment or slow payments or late payments overall?
No. So ultimately the company, I kind of represent and help and partner with, you have not been paying, right? If it's in deferment, people take that as like, oh, it's the government helping me out and whatever. Well, if you're in deferment and you're paying, some of these loans are still accruing interest. Some of them are not. So they're really not doing you a service by letting you not pay and you're still accruing interest. Plus, like you said earlier, if you're not paying anything on any of them, you might completely get disqualified for that house that you're for.
Yeah.
So yeah, and they actually, if you do have hits to credit, they will work with you to help repair that,
Nice.
Separate situation, separate whatever. Let's remove this and then focus on this.
Okay. Nice. Yeah. And so, so what I'm hearing is that it kind of lowers your monthly overall. So your debt to income, on a month by month basis could be reduced significantly. And then it just kind of like lengthens the loan a little bit. Is that what that is? Or
yeah. So
okay.
So they ultimately it's a 20-year or 10-year program.
Okay.
20 years almost for all general public. I say that just because the 10-year is for the public service sector. Which, there are a lot of people that are in that sector, teachers, education, healthcare, law enforcement, all those different things. A lot of those great people and kind of the same thing, right? Goes back to these people aren't paid for putting their lives on the line or being in these drastic situations. They should be entitled to some more help. Therefore they, instead of a 20-year program, it's a 10-year program. And regardless of what's remaining, if you enroll yourself in, through us and through the help of us, in 10 years, it doesn't matter what's left. It's deleted. You've done your part, you're in a program and they help you. We also help yearly with yearly income statements. Like I said, if your situations change, if you family size or household size, maybe you pick up roommates, maybe you're a college student. All those dynamics always, we have that personal touch of, hey, if situations change, let's talk. Are you still good? And your example, we can kind of bring this one in.
But before we get there, I wanted, cause you kind of just, we kind of quickly went over something that I think is important for people to understand. So after the 10-year or after the 20-year, it's gone. So that is insane. I wish I had this program a long time ago, because what I did, and I mean, we can talk about my situation, but like I was one of those uninformed students that I got my master's degree, and I have a couple degrees, and I thought, I got to go to school, and now I don't even work in the field I went to school for, which is funny. But because of the deferred payments and the loaded interest, by the time I graduated, my student loans was $188,000 in total. I'm not a lawyer or a doctor. Like, it was a business degree and information systems. So it's not like any of those types of degrees that should have $188,000. But what happened is as I deferred the payments, interest was still accruing. And then to make matters even worse, and I started to actually make the payments, I was making my payments consistently and on time. And after like a year and a half or 2 years, I called and I said, my balance hasn't gone down in 2 years by like not even $1. What is going on? And the customer service representative was like, you're still paying interest. You haven't even got to the point where you can even touch your principal. And so, it was a moment of frustration. Like, how did I not know like this kind of stuff happens? And so it's great to know that you have a program that'll help people. I wish I knew about it sooner. And I mean, you can talk, go ahead and tell like about my situation. She'll probably say it more eloquently.
No, you're, and you back me up to thinking about something more important. So in addition to, kind of helping people navigate this platform, right, you get, and I'm still using that 188 because I have it up here and it's fresh. If you end up going through a 20-year program, let me go. I won't go. So 20-year program forgiveness amount is $600,000. That's how much you're going to save, like going through.
Yes. Okay. $600,000. That's a house.
Right.
In Colorado, right? In the Denver metro area.
Right.
Yeah.
But one of the biggest things, and a lot of people don't know this if they've already been through a program or their people didn't explain it well enough. It's a taxable event, right? You're saving that amount of money from the government. And then that tax bill at the end of your enrollment period, the 10-year, the 20-year, this is a 20 example. It shows me taxes owed $222,888. So also where I come in, because that money's got to come from somewhere, right? They're still going to, so in financial services, there's basically two things that can do tax-free growth. One's a Roth IRA, which has contribution limits. There's another thing called Universal Life. Universal Life has tax-free growth inside of its policy. So a lot of times we, say, hey, look, yes, we saved you that amount of money. Let's put most of it in this tax-free growth vehicle. That way, when that tax bill comes, you're looking at the same thing. You've got $500,000 in savings, and then you can quickly pay them their $222,000, and you're not worried about where that money comes from. If you were to not do anything with it and just put it in a savings account that draws, it makes me laugh. So I don't even want to use the numbers, but 0.09% interest. It's a joke. It makes me, because I was there for a long time ago. So
as a saver, I bet you were, because you're a really good saver. So for me, when I made that phone call, I was like, screw that. And so I did something because I didn't understand, again, uninformed. And I refinanced into a private loan, and then was like super aggressive at paying it down. So still paying on it, but it's, I'm now under 25,000. Yay. 188,000 to 25. So we went through the process.
Because that's quite the accomplishment, because from where it started at, 80 to 100 or whatever, and then it ballooned up that high, and then you've got it back down there. So, 100% credit where credit's due, because people,
Thanks.
it does. There's also, I think, a sense of pride there. Some people are like, these programs are fake or whatever. Like, I took this loan out. I want to do this. I knew what I was doing. I should pay it back. And that's fine if you have the means, but a lot of people nowadays don't. So like I said, when situations change, let's talk about it and see if you still feel the same way as that stubborn mentality.
Yeah.
People that, kind of think these things are not real or whatever.
Yeah. So it's totally worth it. Like, just to find out. It literally was I went on, they gave me the instructions on how to like pull my numbers from the student loan website. I forgot what it's called, but they gave me like the link, told me to log on. They didn't ask for my personal information. And so I gave them an export. We were on the call for 20 minutes just to find out if you even qualify. Like, what's 20 minutes just to find out what your future could look like in saving you hundreds of thousands of dollars? So that's really cool. And we're actually going to talk some more about this kind of stuff. We have a Wine and Wealth event coming up. And so Chad is going to be talking about, saving, for your nest egg for the future, making sure that you are set up correctly. And then we have Scott, and he's going to be talking about, investing in real estate from from a mortgage broker side. And then of course, we'll be talking a little bit about what's happening with the market and some of the programs that we have to offer. So this is exciting. So Chad, if people want to reach out to you before then, we're going to be posting a link where people can register for the event, but can I drop your email in the comments and the notes and everything for people to reach out to you to find out more about this student loan program? Because remember, like, y'all, you could save hundreds of thousands of dollars. It's not like I'm saving $50 a month. That's $50 over a period of time, which compounds to huge amounts. And then Chad has a program that'll help save you from that taxable event so that the IRS doesn't get even more of that like benefit that we have out there for you. So super excited. Thank you so much, Chad, for joining us. I know this was a really quick one. I know you're a super busy guy, and we were able to get a couple minutes of your time. So I'm excited for our Wine and Wealth event that's coming up. It's going to be awesome, y'all. We're going to have wine. We're going to have food. We're going to have people and conversations. And yes, are you going to do some dancing? Like, I'll do like a really bad robot. Like, this is my robot. Like,
hey, I love it.
Yeah. No, it's going to be a lot of fun, y'all. And we're going to have lots of tactical techniques that you can take with you after the event. So can't wait for you all to join us live in person. And if you haven't met me in person, I'm actually not very tall. So a lot of people always say like, wow, you're a lot shorter than I thought you were. They meet me in person. So I am under 5'5". So just be prepared that I'll be doing a lot of looking up at people. Well, thank you all so much. And thank you so much, Chad. You all have an amazing week, and reach out to us if you have any questions about real estate in the Denver market.
Bye.